Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Viewers question. We asked viewers to submit questions, and we got way too many. Like I said, you're very popular here. We got way too many we can cover in one interview. But the first question is from Bill, and he's wanting to know, when the stock market crashes, do you think we'll see panic buying of gold, silver, and cryptocurrencies?
When the stock market crashes, or when what market crashes?
When the stock market crashes.
Okay, because there's stock and bond market. Right. And there's also the dollar market. So when the stock market crashes, I'm afraid everything will go down. People who think that, oh gosh, it's going to be great for gold, think again. Find me an example in the past where that's been true, because I don't know of any. In the last month, or more, like say from mid-January on, the stock market went down, the bond market went down, the gold market went down. They were all correlated. Bitcoin went down. They're all correlated. What we have, I'll try to keep these answers, under 15 minutes each. No, I'm kidding. Just a few minutes each because there's so many questions. But what we have is a society and a financial system that seems to be integrated together by virtue of its paper nature. By that I mean bonds and stocks are paper. Gold is not dominated in price movements from physical shipments. It's dominated by futures contracts, paper price, forward discovery mechanisms, the GLD function. The GLD function works in reverse. The Wall Street banks take the inventory from the GLD fund, where the absolute effing idiots are the investors. They take the metal from the GLD fund in order to short the market, sell it into the market. So those who invest in GLD are forcing the gold market down. Everything works in reverse because it's all fraudulent and paper related. Okay, but what I noticed in 2008 was that when the whole system suffered big paper market destruction, after the dust cleared, there was a realization that the financial markets were rather bogus, fraudulently constructed, and not of true value orientation. So that's when you saw the big move in gold up to 1900. That was in the year 2011. So after the storm, after the losses, after everything goes down some, I think gold will be realized, and silver, as part of the solution. Yes, but it's got to go through a painful phase. All right, next.
Now, this viewer is an expatriate, and he's currently living in China. He owns $150,000 worth of gold and silver and has a decent holding of the Chinese yuan. He's wanting to know, after the U.S. dollar loses its reserve currency status, how do you see China's economy being affected?
It's a very good question. And if you notice in the last, 15 years or so, at least a dozen years, the Chinese industrial growth has been pretty much on the back of the U.S. economy. U.S. industry has been outsourced. The first phase was to the Pacific Rim. The second phase is pretty much to China. So they've got a bit of a, synergy. They've got a synergy system working with the United States. That's going to be very difficult for them to remove. So here's what the Chinese strategy has been in the last 3 or 4 or 5 years. They want to build up the Southeast Asian, the East Asian and Southeast Asian, that whole corridor, the Pacific Rim, it's a gigantic area. Interior Asia is really not a big show, but Singapore, Indonesia, Taiwan, Korea, Japan, these are big deals. They're big economies, Hong Kong. So the Chinese are trying very hard, and they're using the Belt and Road Initiative to build up their neighboring countries' economies, like with a very big bridge in Thailand, for instance, that will connect to Burma. Well, what will that be for? Well, it might ship goods to the coast where it ends up in China. So they're trying to build up their neighbors' economies. They're trying to also develop, the middle class and, domestic demand within China. And they're doing a decent job at it. Wealth is staying at home and wealth is being developed. The Chinese are so much better at capitalism than the backward, idiotic Americans who think that the best way to get ahead is to hand out money rather than to build companies. How stupid have the American mindset gotten? Nancy Pelosi, what's your secret to economic growth? Tax the rich and put more money in the poor people's hands. The people have a right to the wealth from the rich and the successful. Okay, this is just total socialist bullshit. Failure in policy. We not only have a failure in foreign policy, Elijah, we have a failure in economic domestic policy. We don't know how to grow the economy except to increase the defense budget. We're dumb as hell. The Chinese are building their interior economy, building their domestic demand. They're going to be okay. And right now they're spending as much of their $1 trillion in treasury bonds as they can to develop their economy and to develop, infrastructure projects. And the Chinese built a gigantic, in just 2 years, a gigantic network for oil delivery from Russia, the oil pipeline from Russia. They did it with treasury bonds. What are we doing with our wealth? Jack Ma put it very well of Alibaba, CEO. He went to Davos about, I think 6 months ago, not the recent one, 7 months ago, and said the United States is complaining about all the foreign development and foreign holdings. Why don't they take a look at their internal investment of $25 trillion in the last generation or more on war and defense and weapons that have bought them nothing? So the Chinese are developing the economy, and they're going to lose a piece of their foreign trade with the United States because the United States is just so stupid. All we do is socialist handouts and war spending. That's all we do.
This viewer is wanting to know about your immigration to Costa Rica. You originally are from the United States, and they're wanting to know how hard was it to move there to Costa Rica, and do you feel safe there?
Ooh. Do I feel safe here? This is a very difficult question to answer, and I'm gonna take a somewhat safe road. It's easy to come here in Costa Rica. It's easy. It's best to come here if you have an online business, as I do, or if you are a pensioner, collecting pension from a company plus Social Security. It's easy. It's very easy. The hard part is dealing with the bureaucracy. The hard part is dealing with slippery lawyers. And another hard part is staying away from swindler Americans. And I'm not joking around. Almost everybody I know has been swindled by an American. It's just a ripe land for swindling Americans. There's no criminal prosecution of an American swindling an American. There's no police action. There's zero consequence. So they come here and they sell property that they don't own. So if you're looking to come here and buy a home, you got to be very careful. You got to rely on a fellow American's positive recommendation for an attorney. Because if you just go down the street, hey, I met a really nice guy. He had a nice looking storefront. It's like a 50-50 proposition for fraud. They also, the locals defraud their own. I have so many stories after 11 years. It's easy to come here. If you're interested in just bringing your pension, enjoying a nice quiet life, collecting your income from the United States, setting up a bank account and getting it all satisfied with the requirements, and they know what's coming in each month, it's wonderful here. If you're looking to come, on the other hand, to set up a company, to set up, say, a construction company, or to buy a restaurant, or to have some kind of import-export with purses or something from, you got to be very careful. This is not an easy country to thrive in the business world. There's just too many little pockets that are dangerous. I personally feel safe here because I have a rule, and I honor it. I'm at home at 9 p.m. I don't drink. I know a couple people, they're friends of mine, they got beaten up and robbed. They were a little drunk walking outside the bar at 11 p.m., 12 p.m., 1 a.m. And there's some, bad locals who look for that. They find them, they beat them up, they take their wallet, got a couple $100. They look for them to come out of a casino, a little bit drunk, they jump him, and he's out, several $100s or more. It's also a little bit dangerous to be riding around in a car with an American-looking face, because suddenly every street is one way and you're stopped by a cop. Every street is not one way. But I know two people who've been stopped for one way, and it wasn't one way, but they're out a couple $100. Okay, it's a very weird place. But if you're looking for the slow lane, not the drinking, what do you call it? The barroom outings late at night. You're not looking for the casino. You're just looking for nature walks and a pleasant life, and the simple path. It's great. You try to get really industrious here, you're going to encounter some risks that will surprise the hell out of you. I like it here. I wish I were a little bit smarter with a couple of ventures, including one with a gringo. I hate the Americans here. I don't know how to emphasize that more. I've met 20 or 30 Americans, and I've got about 2 or 3 friends. I hate them. They're drunks, they're idiots, they're politically stupid, they're swindlers, and a couple of them are confidential informants for the Treasury Department. They don't tell you that. I hate the Americans here. I got a Canadian friend. I got two American friends. I got several men friends local and several women friends local. And I make my life with that. When I encounter a new American, my suspicions are way high. What is your game, asshole? That is my attitude. I give them a bad time. I ask, basic questions like, did you vote for Hillary? I thought she had a chance. Just to bait them. A couple times they say, yeah, I thought she was going to be good. I voted for her. I said, you're an idiot. I don't talk to them ever again. Ever again. And when I do, I give them a tease insult. I hate the Americans here. But, 1 in 10 is a nice person. 1 in 10. The rest are just total zeros or crooks.
This viewer is wanting to know about interest rates, and they ask, how long before interest rates catch up to the lag in the default of debt in the private sector, causing a cascade of defaults through the banking sector?
Does this person actually think the United States is going to endure realistic interest rates? Is that the question?
I guess so. I mean, right now, obviously, they're not realistic at all.
Well, they haven't been realistic as long as we've had the global currency reserve access monopoly and can print money and dole it out as we see fit and give trillion-dollar loans to the Fed owners for 0%. We're going to see. Let me try to answer a little bit less flippantly. We're starting to see now bond yields rise, the standard interest rates. We're seeing them rise, and we're seeing some of the effect on, for instance, the Wall Street portfolios for the energy sector. By that I mean their loans to the shale production, Wall Street loans, shale production, in the form of commercial loans and in the form of equity. By that I mean Wall Street owns some of the company, corporate bonds or equity in the companies or standard commercial loans. They're all going to crap. So Wall Street is suffering from I wouldn't call it interest rate shock. They're suffering from the decline in the oil price. We're starting to see now some pain in the junk bond sector, the high yield, the lowest quality of corporate bond. We're starting to see the pain there. We're starting to see other effects that, this is kind of a twist to the question. Many companies in the United States, especially the bigger ones, abused their borrowing privileges and borrowed money in order to buy stock in their own company. And their bonds are now coming due. And with the rise in interest rates, they're going to have trouble rolling over their own corporate bonds. And since they did not invest in their own industries, their own business segments, their own corporate, viability, they were doing gambling on the side and giving nice compensation packages to their executives. This is widespread. It's not a couple companies. It's like 80 big companies. Because of that, they're going to have trouble rolling over their bonds. And I think some of them are going to shoot way up in their rate, and they're going to be some failures in corporate bond issuance and rollovers. So this is an interest rate effect, but it's combined with the abuse of borrowing the free money through the Fed and not doing proper business investment. We had a huge break for several years of very low cost money, and we even then didn't invest in the U.S. economy, while the U.S. government is just going haywire in its socialist lunacy and moronic policy of giving money every which way, including to the Arab human garbage that's coming in through secretive midnight runs. And they're all on welfare, and they're told to vote Democrat. So, yeah, we're going to have some problems with the rising interest rate environment. And it's going to turn out not just to wield damage to the corporate sector. I think it's going to wield damage to the U.S. government sector in the form of treasury bonds. We now are seeing a doubling of the borrowing costs for U.S. treasuries. And Trump has let it be known that we're going to have over $1 trillion in issuance this year. That's one of the few reasons that we are seeing rising bond yields. So with the rising interest rate environment, I would be looking out for derivative accidents that are going to be very hard to identify because we lie as a nation in the financial sector so thoroughly and completely. Look for one Wall Street bank, for instance, to have smoke coming out of its derivative rooms. And it's going to be very interesting to see in what form that will be. It won't be in physical smoke where, eyewitnesses say that they saw a fire. It's going to be in derivative accidents loaded with lies. And it could be that it will involve the algorithm trading, which is being used right now to rescue the system. We've created a mess ever since 9/11. Since 9/11, everything financial internal to the country has turned fraudulent, and all foreign policy has turned war-related and backfired. These fascists who committed the 9/11 crimes and set up shop in Washington are now very, very deep. It's called the swamp. Very, very deep. And if you think Trump can clean it up in 1 year, you're an idiot. If you think Trump can clean it up in his first term, you're naive. I think that it needs 3 consecutive presidential terms to clean up, like 12 years. That's how pervasive it is. We've had narcotics presidents ever since 88 with Papa Bush. 88 to 18 is 30 years of narcotics presidents with hidden fascist policies behind the scenes until 9/11 and in your face fascist policy after 9/11. So I'm expecting a lot of corporate bond failures, corporate financial distress, but also U.S. government in the form of derivative strain and serious problems for the big bank agents, namely Wall Street. It's going to be exciting, but it's going to be dangerous and ugly.
Tony is wanting to know who is buying U.S. bonds. Is the United States just financing their own debt?
Of course. What do you think QE is? Let me explain what QE is. But let me do a preface. When Lehman Brothers failed, what happened 2 years before? The Chinese were betrayed by the Wall Street banks and the U.S. government in a big gold lease. I'm thinking it was something like 5,000 tons. We betrayed them by not returning their gold, and China in 2005 let it be known that they were going to focus their ownership and reserve portfolio on treasuries, and then later like in 2009, they moved to short-term treasuries. So in 2005, when they announced that they were going to go exclusively with treasuries, what they were saying between their teeth was, we're dumping Fannie Mae bonds. That led to the subprime bond crisis. And when JP Morgan and Goldman Sachs bought a couple $2 billion worth of Lehman Brothers bonds, mortgage bonds, and did not pay for them, Lehman died. So it's like having a board meeting and you put a plastic bag over Lehman's head and you say that Lehman had a heart attack at the board meeting. They were murdered. Okay, fast forward. 2011, foreign buyers at treasury auctions vanished. Wall Street banks were still insolvent. The old formula, it's a simple formula, put it on your wall. Insolvent plus illiquid equals bankrupt or equals failure. The Wall Street banks were insolvent after the 2008 subprime mortgage bond failure, housing crisis, all combined together. Huge, huge national disaster. And the Wall Street banks found themselves in a position where if they lost their liquidity, they were all going to enter failure like Lehman. So the Fed came to the rescue and instituted QE. QE guaranteed liquidity. They bought the bonds from the Wall Street banks. Now the Fed owns $4.5 trillion worth of bonds, and 3 of that 4.5 is mortgage bonds. They bought the garbage. Now the Fed is ready to die. I know that's a crazy statement to hear. The Fed has been the garbage man and the toxic vat warehouse ever since Lehman got killed in 2008. So we got 10 years of buyer of last resort of toxic paper. Okay, but when QE came on, let me define what QE is. It's unsterilized hypermonetary inflation. In the past, like in the 80s and 90s, when the Fed would do a liquidity push into the system, add liquidity to the system, they would remove it from the banks. So they would add exactly what they removed. They would allow the banks to operate with a lower capital ratio. They would drain some of the money from the big banks across the board. And what they infused would be offset. A net zero effect on the monetary inflation side. But since 2011, we're up to, QE 176 now. Every few months, they have a new hidden policy for their QE and their rescue of the system because something is breaking behind the curtains that you don't see unless you're smart enough to observe the symptoms of financial fires, which my guys are expert at. The Fed has been doing unsterilized infusions. They just shove money into the system without removing it anywhere. That's what Zimbabwe did. And that turned out to be a horrible nightmare and disaster. Well, that's what we're going to get. It's starting now. We're going to get this disaster. So we're doing unsterilized infusion of money, which is monetary inflation. We're doing it at a large scale, so it's hyper monetary inflation of the unsterilized type. Take a look at the auctions in the last several years, and you'll see very small foreign participation, and often from the Japanese slave state, the vassal country, the Bank of Japan. They want to buy treasury bonds because they want their own yen currency to go down so they can continue to compete well with China, their new neighbor rival. They've been competing successfully against Korea for a long time, but now China is a bigger rival with a lot of Western muscle, foreign direct investment, FDI. Take a look at the auctions and you'll see a small participation by foreigners. Who makes up the difference? The Fed. A big event took place, and I've told this story several times. It's worth telling again. In 2010, the last half, there was what the Fed and Wall Street described as a very big treasury bond bull market that drove down the 10-year interest rate, 10-year bond yield, from 2.4 to 1.6%. They called it a global flight to safety. It was a grand lie because foreigners were not buying. There was no evidence in the data of foreigners buying the bonds. There was very little evidence of Americans buying the treasury bonds. But what there was in the OCC, the Office of the Comptroller of the Currency, a huge $8.5 trillion increase in Morgan Stanley's interest rate swap derivatives. They needed the 0% in 2009, which I called months in advance, in order to have a zero cost for the feeder into the interest rate swap derivative system. Zero cost, you do their little magic internally and out comes, I'm making it simple, but this is the rough cut of what it is. Zero input cost and out comes a 10-year bond purchase. So they use the swaps internally, two different types. I don't want to get into details because it's messy. And to be honest, I don't understand it 100%. I only understand about half of it. It's very difficult. But the 0% feeder system was essential to create fabricated, fictitious, derivative-based, banking-sourced bond purchase demand. That is what's buying our treasury bonds. It's managed by the Department of Treasury and their Exchange Stabilization Fund. Rob Kirby talks extensively about it. I believe that the nut core behind the ESF, Exchange Stabilization Fund, is approximately $3 trillion of reserves that the Saudis invested in and will never see it again. It might, I don't like to use the word stole because it might have been part of the petrodollar foundational structure that the Saudis would divert, say, half of their treasury bond purchases under the Treasury Department's control, and it will be owned by the Saudis, but they'll never see it again. Okay, that whole system is producing interest rate swap derivative control, which produces treasury bond demand. It's a grand dirty secret. Who's buying the $700 billion a year in Treasury bonds? Who's buying them? It's the Treasury Department buying it all by itself in the majority. This ESF fund is the largest slush fund for criminal financial activity in the history of mankind. The Fed is the largest private company involved in criminal financial activity in the history of mankind. The Fed is using QE. The Fed is using reverse repos, enabling the Wall Street banks to leverage up 100 to 1, maybe more, in Treasury purchases based on Treasury ownership, while the Department of Treasury is operating its ESF fund with fabricated bond demand. We're buying our own bonds. Yes, we're very much buying our own bonds. It's visible at the Fed. It's invisible at the ESF run by the Treasury Department. It's not quite so visible with Wall Street because they run double books. They've got second books of all their off-balance sheet derivatives that are in the trillions. And they boast that the multi-trillion, like, oh gosh, what was it 7 or 8 years ago? $1.5 quadrillion worth of derivatives, and now they're saying we've successfully pushed it down to 750 trillion. We've cut it in half. No, they haven't cut anything in half. All they've done is they moved it out of sight into their second books, their off-balance sheet books, the books that are never revealed in the J.P. Morgan and the Goldman Sachs and the Citibank and the Bank of America, and in their quarterly earnings announcements, never revealed. So, yes, we're buying our own bonds in a visible and invisible way. I would make a rough estimate that we're buying at least 80% of our own bonds. It's called monetization of your debt. Zimbabwe tried it and it blew up. The United States is doing it with the global currency reserve and the Federal Reserve that runs the dollar, and therefore the global financial system will blow up, which was my forecast when we put on QE, which I expected several months in advance with another correct forecast. And what I said back in 2008 was when they go to 0%, it'll be forever. And what I said in 2010 was when they go to QE, it'll be forever. And now you might say I didn't get the forever part correct with the interest rates, to which I say, are you sure? Because if you look internally, every time they do an interest rate hike, they do something in the background to take it away. Next question.
This one is about Germany flipping east, and they're wanting to know, can you give us an update regarding Germany flipping east in an economic sense, if not a political sense as well? Do you think this will actually happen?
It's happening already. It's just not reported much in the U.S. news, which does not really report much financial news. It reports financial propaganda and bullshit. By bullshit, I mean economic statistics that have no basis in truth. The Germans responded to the Russian sanctions following the Ukraine war that the United States started with the help of Israel. Well done. And then blamed Russia. What a Mickey Mouse story that is. The Germans responded to the Russian sanctions by quickly buying up industrial plant and equipment inside Russia, retooling it, putting the German name on the company. What I'm saying is they made subsidiaries in Russia, some from scratch and some from retooling. It's not all of either. They put the German names on it, had the production, German output in the Russian economy, and sold it to the Russian clients, as opposed to doing it directly from, say, the Mercedes factory inside Germany, or the Siemens factory inside Germany. It was from the Mercedes and the Siemens subsidiaries in Russia. Okay, that was the first thing they did. That's pure economic, smart business, typical German. Okay, they worked around the sanctions. The fight is more political right now. And that fight was lost for a couple of years in 15, 16. In 17, the tide turned. The U.S. controls the highest element of the German government. There are now a lot of stories out there in Germany because the cover has been blown off. The stories now are of who the leaders are in Germany and where they came from, how they got ushered through the system to become leaders. And when they unified Germany with East Germany and West Germany, what they didn't plan on was unifying the intelligence agencies of Germany resulted in a split. The old Stasi East Germany part kept some of its connections with Russia. I know that's pretty hard to swallow, but all you have to do is maintain your Rolodex of phone numbers and maintain your meetings for these people who show up at a restaurant and have some false ID. That's not hard to do. So the Germans have had a split in their political makeup at the control room. Now suddenly you find the vice chancellor, Gabriel. His name is Gabriel, and he's speaking in a pro-Russian tone lately. He doesn't like what he's seeing. What he's seeing is economic damage from the Russian sanctions. There's been a decline in Russian-based trade for the German economy. They don't like that. So they've increased their trade with China to offset that, and they're running pretty even. The Germans very rarely see a decline, and they respond to a threat of decline by taking action to avoid the decline. They're very, very smart administrators and managers of both their monetary system and their economy in Germany. They're the smartest of the bunch. I think they're the smartest tribe on earth. You get some argument from Taiwan, but Taiwan is not a tribe. That's an outlet for the successful of China who evaded Mao Zedong and, led by Chiang Kai-shek. It's a long story, Chiang Kai-shek and all that. Okay, Germany is reacting to their own problems right now by saying, screw you to the Brussels and Washington dictates. Okay, they're trying to set up a dictatorship out of Brussels. The European Union is a fascist dictatorship. The evidence is so high in its pile that it's becoming funny that it's not recognized by the people in the United States and the people of Western Europe. I make a theory, Elijah, that in the United States, Americans do not know what fascism is and put a disqualifier that the United States could ever be fascist by definition of our Declaration of Independence and Constitution, which I say is utter nonsense. You must not know what fascism is. Okay. The Germans are now at a point, because something happened about 3 or 4 months ago. The United States, in its infinite stupidity in its government, decided to inform the Germans that regarding their Nord Stream 2 project, any financial company or construction company involved in Nord Stream 2 would be subject to U.S. sanctions. To which the Germans said, excuse us, this is our country. Get the hell out of the room. The United States backed off. There have been some lawsuits in the EU, Brussels courts that the Germans won. So the U.S. had to back off. In the process, the United States has made an enemy. The Germans now regard the United States as interfering with their political system after having interfered with their economic system that they consider sacred. So the Russian sanctions interfered with their economic system and caused a decline in Russian trade. And now our, the transatlantic trade partnership, a trade union for Europe, Trans-Pacific Partnership, TPP in Asia, TPIP Oh gosh, it's hard to remember it all. The trade union, the fascist trade union that the Obama administration set up for Europe, it's gone nowhere. Not a single member state in Europe wants it. Not one. Well, nice legacy, Obama. The Germans are now successfully resisting the sanctions and have pretty much put the U.S. on notice. We're not going to honor them anymore. You're getting trade conferences, not meetings. These are conferences with dozens of big corporations on both sides, Russia, Germany, setting up new trade deals, defiant of not only the U.S., but Brussels at the EU Commission. I'd like to see the EU Commission dissolved. Germany is dealing successfully with the threats from Washington and Brussels. And they're going to continue, and they're going to move forward, and they're going to be the principal European member state contributing within the Eurasian trade zone. Germany has always taken care of the Eastern European member states. They will continue, and they will have Hungary strong at their side. A lot more progress is coming. I want to see open defiance of the Russian sanctions, and you're starting to see that also in France. Ironically, from President Macron, who's a globalist screw-up, one of their boys. He might not be following all the orders. He might be listening to his own people. Okay, let's move on. Next.
Now, this one is from Tony, and he's wanting to know if Venezuela, Qatar, Iran, China, and Russia have decided not to use the dollar. How is it that the dollar hasn't crashed yet? Interest rates gone through the roof.
Because the control of the dollar and treasury bonds is largely the function of the Exchange Stabilization Fund. We're buying our own debt and controlling our currency, even though foreigners are dumping it. Okay, but what that does, Elijah, is it creates an undercurrent of reality. And that undercurrent is very harmful and counter to the dollar and U.S. financial markets. That's why we saw in the last half of January and most of February, something unusual happened that hasn't happened in about 20 years. It was the dollar going down, the treasury bonds going down, and the stock market going down. So when all those countries that you cited have been increasing in their non-dollar petroleum sales, the effect has been noted in the dollar decline, bond decline, stock decline, all simultaneously. That happens only when we're approaching a severe financial crisis, like what we did with following, say, Black Monday in '86, and a couple of other instances in recent U.S. history. Okay, what's coming next, though, is damage to the petrodollar derivative machinery. I remember like it was yesterday, the voice said to me back in 2014, this Ukraine war is just one of several different elements going on simultaneously. Behind the scenes, you're seeing a dismantling of the complex derivatives linking crude oil, the dollar, and the major currencies. And I said, does this mean we're going to see a breakdown? He said, yeah, it'll take several years to unfold. So this has been going on for a while. And it's not going to have its conclusion easily. It's going to have a conclusion that's quite painful, confusing, and multifaceted. When these foreign countries continue to sell oil, the next big, outside the dollar, the next big phenomenon, there are going to be two. The two phenomena. I hate the plural in Latin for, agendum and agenda. Come on. The next two big phenomena are going to be the Chinese buying Saudi oil in RMB terms. And when that happens, the The whole petrodollar system is going to undergo some shock behind the scenes. And it's going to be deadly for the dollar. And the U.S. managers are going to institute the dual universe. They're going to tolerate the RMB sphere, and they're going to advance the dollar sphere as much as they can, or force tolerance and acceptance. This is going to be behind the scenes somewhat, and it's going to be difficult to manage for the U.S. Exchange Stabilization Fund managers. Very difficult, because you're going to end up seeing the Gulf region of Arabs, one after the other. Qatar is already selling oil and gas to China in RMB terms. They're already doing it. But when the Saudis do it, the rest are going to follow. And the Chinese are doing something extremely clever. They're trying to win this oil purchase privilege in RMB terms by means of Aramco investment. And when they put their investment money into Aramco, and the Russians might match that, the Saudis are essentially going to outsource control of their petroleum industry, not just oil, petrochemicals too. When this happens, the Chinese are then going to say, we're part owners of Aramco, therefore we're going to allow, because we've got a vote, we're going to allow Saudi oil purchase by China in RMB terms. It's going to be another very serious dagger in the chest of the king dollar. The king dollar is not going to die suddenly. It's going to die from 100 dagger wounds. And we've already suffered 20 or 30. More to come. The second big phenomenon, as a result of these countries selling oil in non-dollar, is the Rosneft, what I call the Rosneft Oil Consortium. They've got contracts now with Iran, Saudi Arabia, and Venezuela. They're talking with other countries like Mexico. So these oil-producing countries that are not best friends of the United States, they're now under contract to sell oil to Russia, which is kind of funny. It's a brilliant stroke by Russia, because what the Russians are doing is they're saying, we're the #1 oil producer in the world, but we're going to buy oil from all those countries that don't want the dollar, so that we can mix it and get the viscosity right, and we can clean it and get the contaminants out, the sulfuric contaminants, and then sell it in non-dollar terms, and it won't be the fault of the Venezuelans for doing so. Iran will be selling oil to Russia, who will sell it in non-dollar. The Saudis will be selling oil to Russia, who will then sell it in non-dollar. Okay, this is all part of the petrodollar coming into pieces. So, as a result, you're going to have a dual-sided maneuver by China working with Russia to bring about more oil sales outside the dollar in RMB, while the Russians develop their giant Rosneft Oil Consortium that will be creating a new OPEC. It will be stronger than OPEC. OPEC has been like, 20 different voices in a gaggle. Arabs never agree on much of anything. They always break their own agreements. And you've got 100 examples in recent history of this. They have their Vienna meetings, and it's all nice and everything's good, and they go back home, and then they find that, Algeria and Nigeria both violate, or one of their own, like Kuwait, violate, or Qatar violates. Okay, but under Rosneft, it'll be a principal kingdom of a new oil cartel that's non-dollar, that will put to rest OPEC. OPEC's been dead for 2 years. I called this a while ago. They haven't had a single agreement that's stuck in 2 years. So whatever they meet and agree on something, it's all for show to try to affect the oil price. And the oil price is moving up only because the Fed is buying futures contracts for oil with Wall Street as complicitors. Okay, this new Rosneft oil consortium will be powerful, and it's an answer to the petrodollar, and it is not just a dagger in the king dollar's heart or chest. It's a very big swipe by a Cossack sword across the entire midsection of the king dollar. It hasn't been realized in its full depth and pain yet because it's still setting up. They just signed on Venezuela. They're talking to Mexico. Iran is their biggest element there, and Saudi is their biggest political element there. It's very exciting. It's very exciting to watch the death of the dollar because we're going to see a better financial system come. And it's going to be with a lot of shockwaves and a lot of pain. All right, next.
Now, moving to some questions on precious metals. This viewer is wanting to know about JP Morgan and their physical stash of silver. Do you think they're stashing silver to profit from higher prices or to cover their naked shorts when they short the paper market?
This is a very tough one. I think a couple things are at work right now. Was the focus silver? I didn't quite.
Yes, JP Morgan's physical silver position.
Silver, a couple things are at work here. First of all, eventually the Wall Street banks are going to jump sides. They're going to go to wherever the profit lies. If they cannot maintain their system of gold price suppression much longer in the face of an Eastern avalanche moving toward the gold standard in stages, they're going to switch sides. I think they're going to either move toward long positions in gold or increase their shorts and enjoy a force majeure forgiveness of their multi-billion, if not greater, like maybe $100 billion. I don't know. It's very difficult to size their short positions. I think they're going to switch. Now, you're focusing on silver in the question. I focus on gold and silver, always both. This is going to be very difficult. It's not clear the pace at which the East, namely China, Russia, are going to move toward the gold standard. And with the gold standard, silver will comply. It's not really certain. Okay. On the other side, there's something very important going on. The Chinese built up a silver stockpile back when Hong Kong got turned over and the U.S. signed its most favored nation status, and the $23 billion in U.S. foreign direct investment came in a 2 or 3 year period. And by 2003, it was very clear China was going to become an industrial power, but it was still fledgling, moving along. And now it's got more muscle and more development and more Japanese foreign direct investment as well. Okay, all is moving forward. In the process of all this, the big stockpile of silver that China developed has been depleted. They needed it for industrial purposes. They needed it for Apple phones. They needed it for electronics of a wide variety. They needed it for their own missiles for the Chinese military. They've largely used up the Chinese silver stockpile, whose volume was kept as a state secret. We know that in the United States, it was roughly 5 billion ounces that Teddy Roosevelt developed in 1905. That was depleted about 10 or 15 years ago. I'm told by some clients that Franklin Roosevelt, following World War II, also developed a strategic silver stockpile. And to be honest, I don't have much information about that. But what I believe is going on right now is a complex sequence with China and JP Morgan. In 2000, Wall Street, with JP Morgan leading the deal at the table, leased 5,000 tons of gold, give or take, from China. And we reneged on it. We never gave it back. But the Chinese expected something like that. So they protected themselves by setting up a national mortgage stream type bond with the interest rate. I'm sorry, with the IRS, with Internal Revenue Service. Tax revenue was set up as, this was put together by Rob Kirby as a theory. The Chinese demanded that the secure revenue stream from income taxes to the U.S. government be organized and structured into a bond. And the United States lost control of that bond. And in the process, J.P. Morgan lost its own headquarters. This is a 2015 event. Check the recent data, and you'll see that the J.P. Morgan entire headquarters center, including their gold vault, with underground connection to the Federal Reserve, has all been forfeited to the Chinese property conglomerate. I think in the same swift movement of events, the Chinese hired J.P. Morgan to replenish their silver stockpile, and they do it in the form of forwards purchases with futures contracts under the J.P. Morgan books. So some people might get fooled into thinking J.P. Morgan's going long in silver. And I'm saying, no, I think first they're doing the lackey duty for China in replenishing the Chinese stockpile. It's just full of intrigue everywhere you turn, Elijah. If you just stick with the New York Times, the Wall Street Journal, and Barron's, you miss 2/3 of what's going on. You take the hat trick letter, you pick up a good deal of what's left out.
All right. Well, Jim, Willie, thank you so much for joining us today. And if our viewers are interested in learning more about your hat trick letter, where can they find it?
Go to www.goldenjackass.com. No hyphens or anything. goldenjackass.com. On the site, you'll find a lot of free material, interviews and public articles. But also on the site, you find a paid newsletter. Paying clients buy a newsletter. I'm working on the March newsletter right now. It should be, it's just in the form of a bunch of notes right now. And it's growing every day, the notes, and then eventually becomes chapters. And then finally is posted later this month, not the end of the month, but later this month. So goldenjackass.com is where you find this. And I urge people to do something very intelligent. Don't follow the biggest moves of today. Plan for tomorrow. The stock market might go up again, but I think it's going to endure some severe problems because the bond market is going to have problems. And what they rely on often in Wall Street and their expectations and forecasts is what they call the Fed valuation model. Lower interest rate, higher stock market. Well, now you're seeing higher interest rate. That means lower stock market. We're going to see bond and stock distress. And later, we're going to see an unbelievable move in gold and silver. And, I get very short-tempered with people who say, Jim, you just haven't been right with gold yet. And I say, well, yes, I have. The price has not reflected it yet, because the anti-dollar, the non-dollar platforms are guaranteeing a return to the gold standard. And given the insolvency and bankrupt balance sheets of the major central banks, the Fed, the Euro Central Bank, they're going to have to cover their toxic bonds with higher asset values in the form of gold. The central banks are going to be buyers of gold, and they will do it quietly so that you're not in front of them. Well, get in front of them. Take advantage of these artificially low gold and silver prices. Get in front of them. The central banks will be buying. They've already started. European banks are already buying gold. The Chinese are buying gold hand over fist. The biggest question right now is, what gold will be sourced? Where will it come from to satisfy and deliver on the Shanghai gold contracts? So go to www.goldenjackass.com. Have a good time. Sign up for the newsletter. Get ahead of the crowd, and don't listen to the propaganda in the financial rags out there. And don't get caught up in the latest run-up in stocks. Buy the bargain gold and silver. It's at a tremendous lifetime discount. Not going to last long. The Voice just sent me a message 2 days ago saying China and Russia are making